Good afternoon, everyone, and good morning to our friends on the West Coast. I'd like to thank everybody for joining us today for our webinar on smarter giving. My name is Jordan Schwan. I'm a portfolio manager at Newport Private Wealth, and today I'll be your moderator for our discussion. We're excited that this topic has generated so much interest because charitable giving, when done correctly, can be a tremendously fulfilling and a powerful financial tool. It's part of smart wealth planning, which is what we help clients with here at Newport. Today, our expert panel is going to get us started down the path to smarter giving. This is giving that has a high impact and is also tax effective. Over the next 40 minutes, we have a broad agenda, and I think there'll be something for everybody. We'll begin by talking about new ways to give, more effective ways, particularly for those who want to become a strategic donor rather than a check writer. The most tax-effective ways to give. This has a significant impact on your bottom line and also the bottom line of the charities that you support. We'll talk about how to create a mission or a framework to ensure that your values are aligned to the causes that you support, which makes it easier to say no to the ones that you don't. We'll also talk about including family, the next generation who's going to carry on your wealth and values. And lastly, we'll discuss how to evaluate the impact of your giving, reporting and measuring results. This gives you the confidence to know that the money that you're donating is being put to good use. After our conversation, we will have time for a few questions. So I'll ask you to use the Q&A button at the bottom of your screen, and we'll answer them towards the end. If we don't have time to answer your questions, don't worry. We'll reach out to you directly after the webinar. So without further delay, I'm going to introduce our expert panel. We're thrilled to have with us today, Denise Castonguay. Denise is the CEO and founder of Canada Gives, a not-for-profit organization that makes it easy for individuals to become active philanthropists. Canada Gives administers donor-advised funds, which are a simple alternative to private foundations, and we'll touch on them more in a little bit. But they are currently one of the fastest growing tools for giving. Denise and her organization have enabled more than $46 million of donations to charities by the families that she works with around the world. A number of our clients here at Newport have foundation accounts at Canada Gives, which we manage for them. Also with us is Terry Jackson, a retired banking executive and longtime Newport client, for which we're very grateful. Terry and his wife, Bonnie, have been philanthropic leaders in Canada for the past 40 years. They support national causes like the Juvenile Diabetes Research Foundation, but also local causes closer to home in their community of Oakville, Ontario. Terry is the former chair of the Community Foundations of Canada. And our third panelist is my colleague, Vince Didkovsky. Vince is a director of wealth management here at Newport. And as you can tell from his long list of credentials, Vince is a professional overachiever. He's a chartered accountant and he focuses on tax. And believe it or not, you may find his passion for the subject contagious. I'll let you be the judge of that, but we'll talk to Vince shortly about tax. So with the introductions behind us, let's get the conversation underway. Terry, I'm going to start with you. People give to charity for a lot of reasons. Why don't you start by telling us why you and Bonnie give and how you got started?
Thanks, Jordan, and good afternoon, everybody. That's right. We've been involved on the charitable side for over 40 years. We got started in the charity sector because our eldest daughter, Joanna, was 5 years old at the time and was diagnosed with type 1 diabetes. So Bonnie and I got involved with the Juvenile Diabetes Research Foundation and still are involved 42 years later. Once we sort of learned more about how charity works, being involved with JDRF, that sort of expanded as we started growing, the family started growing, and basically we realized that there was more to be done out there, not just JDRF, but many other charities. And so that started our journey, if you will, in becoming involved in more causes and really looking what was available out there. And we were fortunate at the time that our family was growing. We moved to Toronto and met a lot of new people, and it really gave us the focus that we could think about what more we wanted to do, and whether it was in our community or internationally or nationally. So And we've had the pleasure of and the honor really of being involved with charities right from international ones such as JDRF right down to many that are involved in the Oakville side of things.
Thanks, Terry. Those are a lot of good reasons, and I'm sure many of you can relate. There was actually a survey of Canadian philanthropists that asked them why they gave, and there was a range of results. And on your screen shortly is the survey results, which are ranked. So compassion towards those in need and personal belief in cause were two very strong reasons why people chose to give. And interestingly, towards the bottom of the list is the tax credit. And so we know tax influences how much people are able to give, and we'll touch on that shortly, but just thought it would be interesting to share these survey results for everybody to look at. But first, Denise, I want to talk to you for a minute about giving during the pandemic. This has been really challenging for charities and their fundraising abilities. You mentioned earlier that clients at Canada Gives have really stepped up during the pandemic. Can you tell us what you're seeing?
Yes, thank you, Jordan, and welcome everybody. In 2019, you can see that this was a fairly typical year for our foundation funders. Half of the money that was dispersed to charities, about $6.5 million, was split almost evenly between the health sector and education, and that's fairly typical. The rest is sprinkled amongst community benefits, social services, and churches. But in 2020, at the end of March, it dramatically shifted. You can see that almost more than half the money went immediately to the healthcare sector, and a huge portion also to social services. So between April and the end of summer, our foundation clients gave immediately, and they gave big. We were funding charities. Twice as much funding went to charities as they did all last year in those few months. And particularly notable from our Alberta donors, they have our largest foundation accounts, and they certainly have given extremely generously beyond disproportionate to their size, for sure.
Thanks, Denise. That's a great stat, and as a born and raised Calgarian, I know it's been a tough 5 years in Alberta, so that's a really great to hear that they're not only willing and able to make significant donations. The way people are donating is beginning to change as well. And so traditionally, people have donated directly to charities. Angelica, if you could just bring up the next slide, please. Thank you. So traditionally, the donation goes straight to the charity, the donor receives the tax receipt, and the charity has a gift that they're able to use. What we've seen, particularly among affluent donors, is an explosion in the popularity of foundations. And what you see in a foundation, if you could move to the next slide, please, Angelica, thank you. The donation, the donor puts the money into a foundation. So they open a foundation or they create a foundation account. At that time, they receive the full tax receipt. From there, the money can go straight to charity, but typically what we see is the donations are made over time, subject to a 3.5% disbursement rule by the CRA. The benefits of this are it allows the donor to be more strategic in their decision-making over a number of years, rather than having to decide immediately which charities will get the money. Also, the money inside of the foundation is invested, so it grows, allowing the charities to not only receive the initial gift, but also the growth in addition to the gift. When we're talking about foundations, there's two types of foundations. The first type of foundation is a private foundation. These offer maximum control. You can hire and pay family members and staff. They're generally set up for individuals or families explicitly. The cons are the public can see the financial information. They can see the size of the foundation. They can see recent gifts. You also may need to hire expertise in regards to philanthropic giving and advisors. And there is some CRA risk associated with filing of the tax returns. For most of the accountants that we speak with, they suggest a minimum of a $2 million initial contribution in order to justify the setup and ongoing costs. So a number of our clients do have private foundations. They're obviously a significant commitment. And today we'll spend more of our time focused on public foundations, which are more accessible. So the other type of foundation is a public foundation, or commonly a donor advised fund. In this type of foundation, you're not able to hire your family members, and there's a little bit less control than you would have in a private foundation, but there are a number of advantages. And so I'm going to turn it to our expert panel to discuss some of those advantages with us. One of the advantages is privacy. And Denise, I know you've had some experience with this advantage, and so I'll ask you to comment on that. Denise, you're just on mute still.
Okay. Thank you, Jordan. Sorry for the delay. Certainly all foundations, all registered foundations, whether they're public or private, are required to file an annual return and complete financial statements, usually audited, with CRA every year. And CRA, in their wisdom, discloses all of that financial data, and certainly on their website and in directories, and all 85,000 plus charities in Canada know that. And they consider foundations, a wonderful source of funding. So they're actively soliciting foundations. Of note, though, are public foundations that sponsor donor-advised fund programs like ours report, as we all do, but we report on a total basis. So the CRA, neither CRA nor the individual charities see our donor-advised funds. We just report our total activity, our total granting, our total donation. So that umbrella of having your foundation account under a public foundation is appealing to many donors. An example of that, recently we had a donor out west who moved actually from Toronto, Vancouver, and he is a very wealthy fellow. He and his wife are very active in the not-for-profit sector. They could have easily set up a private foundation. They sit on many boards though, and they did not want their financial data available for all to view. If one charity sees that you've given $50,000 to another charity, they're going to be expecting you to do that for them. And so they felt very strongly that the privacy with a donor advised fund under a public foundation was much more appealing.
Thanks, Denise. That's very helpful. Good insights. Vince, I know you've got some experience on the tax and legal side of the foundations. Can you comment on that?
Yes, thank you, Jordan. There are 3 points that I would like to highlight. So the first one is the setup of a private foundation. It could take anywhere between 12 to 18 months to get the approval from the CRA, and it could be anywhere between $10,000 and $25,000 in legal and accounting fees to actually set it up. 2 is compliance. So as Denise mentioned, for the private foundation, you have to file a tax return with the CRA, and your financial statements may require an audit, which of course could be pricey. And finally, 3 is the legal and CRA risk. So legal and CRA risk would be assumed by the family who set up the private foundation. Comparing this to a donor advised fund, it is the public foundation that would take care of the setup, compliance, and assume the legal and CRA risks.
Terry, you've had some experience with your local community foundation in regards to local expertise and directing some of the giving. Can you comment on how you can use that?
Yeah, great. One of the benefits of belonging and having a fund at one of the community foundations, and there's 191 of them across Canada, is the fact that they are really tuned in to what the needs are within the specific communities. As you find, most donor advised funds will not just have their money going to the specific community. It may go right across Canada for that matter, but there are a great opportunity because the specific community foundations have done the research and are in touch with the local community and with the local charities. And so it gives you an opportunity to sort of max into their knowledge. And if you are still looking as to what kind of causes that you want to promote and support, they can be very, very helpful in guiding you in the right direction. And quite often they come across some smaller charities in their communities that you may never have heard of or seen, but are really in need or may have some unique thing that fits the kinds of charities that you're looking for. So the things such as vital signs, which the Toronto Foundation has been producing about the city of Toronto for the last 10 or 12 years, and many other areas, and it was especially evident this time round in March when the Oakville Community Foundation started a special resiliency fund, as did many other community foundations that helped meet the needs during COVID.
Thanks, Terry. And Denise, you've had some experience helping clients in terms of expertise, perhaps more on a global footprint.
Yeah, supporting foreign charitable activities is interesting, but can be very challenging for Canadian foundations. If there's a Canadian registered charity working in the country that a donor wants to support, it's very straightforward. You just issue a check and send it from your foundation like you would any other grant. But if in fact there's no Canadian charity working in the area that you're interested in, it is much more complicated. You have the option of setting up a project, but in order to meet CRA requirements, it takes some specialized expertise. We had a donor approach us about developing that expertise, and so we did, and now have our Global Projects Initiative area where we can work with our foundation clients to do specialized projects overseas. So some of the projects that we've been able to work together on, that first donor who helped us develop this built a girls' school in the Congo over 6 or 7 years. We've been able to work with another donor to set up medical clinics in Honduras. We completed a microfinance program in Rwanda. And currently we're working with one of our clients to help farmers in Mozambique learn how to raise and market chickens. So it's actually complex, but it's quite a bit of fun, and it's certainly extremely rewarding.
Wow, that's incredible. Good for you. So for me, just a couple of takeaways here on donor advised funds. The first is they're strategic and easy to access. Secondly, it allows donors to focus on some of the more enjoyable aspects of donating, not some of the operational or administrative burdens. And lastly, I'll just make a comment. It's not limited to smaller donations. Some of you may know Sheryl Sandberg from Facebook, and she recently actually donated $100 million to a donor advised fund in the United States. So there are clearly many reasons why people give, and tax often plays a role in how much they'll give, as we had alluded to earlier in the conversation. So how you give and in what form is really important from a tax standpoint. And I'm going to ask Vince to give us a little bit of information on this. I'll warn you, there are a few numbers. We'll keep it brief, but go ahead, Vince. Tell us about the tax.
Thanks, Jordan. Yes, I'll try to keep this as brief as I can. So the best way to illustrate tax efficient strategies is through the following example. So there is a philanthropic family that lives in Ontario, and they own a portfolio of securities with a fair market value of 1 million and an adjusted cost base of 200,000. So there is an accrued capital gain here of $800,000. Both spouses have significant income and are taxed at the top marginal tax rate. They're looking to donate the proceeds of their portfolio to charity, and their goal is to maximize the impact of their donation. So they're considering two options. The first one is sell the portfolio and invest the after-tax proceeds. And the second option is donate the portfolio of securities directly. So let's take a look at these two options. So the first option here is that we have a family that owns a portfolio, and there is a charitable foundation that they're interested in donating this to. So they're going to sell this portfolio and net $786,000 after taxes, after they pay the tax on the capital gain. Then they will donate the $786,000 to the charity, and they will receive a donation tax credit of $396,000 for their gift. So here's a quick summary. After we account for the taxes on the capital gain and the donation tax credit, which is worth $396,000 in this case, their total cost of donation is $818,000. So in other words, it cost this family $818,000 to get $786,000 to the charity. So the donation efficiency here is 96%, and that certainly isn't bad, but can we do better? And the answer is, of course we can. So let's take a look at a different way to structure this gift. So in this case, instead of selling the portfolio, what this family is going to do is donate it directly, or in other words, make an in-kind contribution. The charity receives a portfolio of $1 million. The family realizes a donation tax credit of about $500,000 on that gift. And then the charity would like to monetize that portfolio. So they're going to sell the portfolio. So they're monetizing this portfolio, they sell the portfolio, and they net $1 million because, as you recall, charities are not subject to tax. So in this situation, we're able to avoid the tax on the capital gain entirely. So let's take a look at the results here. From the family's perspective, after we have accounted for the donation tax credit that they realized, their total cost of donation on after-tax basis is only $496,000, but the charity gets the full $1 million. So our donation efficiency in this example is over 200%. So in other words, again, it cost our family $500K to get $1 million to the charity. Like, isn't that amazing? This is exactly why I get excited about tax.
That's great.
So
That's great.
So to summarize, option 2 is obviously more tax efficient. And the main point I wanted to make here is that how you structure your donation really matters. So in this case, just by changing the structure and donating the portfolio to charity directly, the family was able to double the impact of their donation. And in the interest of time, I didn't want to go into other structures, but if you are planning to give and structure your donations through a corporation, the results could be even greater.
Thanks, Vince.
So Jordan, if I could just jump in there for 1 sec.
Terry, go ahead. Yeah.
With the counsel of Vince and Doug Brown and others at Newport, our family did almost exactly what Vince is talking about here, whereas we had a large capital gain on some shares, and last year we donated the shares directly to the Community Foundation in Oakville and did the tax savings, and it worked extremely well, and I can tell you it was really nice to get the tax credit back.
Fantastic. Fantastic. So some of the largest gifts that we've seen are bequests from a will. And I came across an interesting stat, and it said only 25% of high net worth Canadians have formal philanthropic plans in their will, but more than 90% indicated an interest in doing so. So clearly, Vince, this is on the mind of many Canadians. And from a planning perspective, can you explain some of the benefits and drawbacks to leaving a bequest in a will?
Of course. Thanks, Jordan. So as many of you know, when a person passes away in Canada, there is usually a large tax liability that arises on death. And when that person donates some of their assets through the will, that generates a donation tax credit, which could be offset against the tax liability. So on death, there is a tax liability, and when assets are donated, there is a donation tax credit that can offset. So this is certainly a valid planning tool that can help mitigate taxes on death. However, one of the major drawbacks of this strategy, and this is something that I've seen with many of my clients, is that the donation tax credits that is generated from bequests far exceeds the tax liability, and as a result, some of the credits may be wasted. So a better way to do this is to create a giving strategy that allows you to donate in the years when you're living. This way, you can see the impact of your donations and also save tax at the same time. So it's always better to do that whilst you're alive than wait until the time that you pass away.
Absolutely. While we're on the topic of planning, I'm just going to mention that insurance can also be used as a creative way to increase your giving, often at no additional or small additional cost. So at Newport, and as well, some of our partners have expertise in this area, and if there's interest, we'd be happy to have a conversation with you offline. So I'm just going to sum up again where we're at right now. So we've covered the structure of giving matters. A foundation account can help you think longer term while enjoying the tax benefits up front. The form that you give matters, whether it's cash or shares from an individual or a corporation. You can literally multiply your donation and the tax savings. So now let's talk a little bit about a framework or a plan for giving. And in my world, this would be equivalent to an investment policy statement, where we outline the client's goals and objectives. We talk about how the portfolio will be invested and the parameters in order to meet those goals and objectives. We then meet to discuss changes and obviously to ensure that we're still on track. Denise, you say that this is a common approach for true philanthropists and how they think about their giving. So what advice would you give to somebody who wants to develop a mission or a framework for their giving?
Well, Jordan, when people start, when they open a new donor advised fund with us, a new foundation account, this is typically how they have experienced their giving and how they're used to thinking about their giving. It's almost all transactional. They simply respond to requests, whether those come from charities they've been supporting or from neighbors or friends or family or colleagues at work. They're responding to requests and they're sending out individual checks. At the end of the year, they've supported a number of charities with one-time gifts. And next year, that list might change dramatically and they begin all over again. There's very little of that money that's actually focused on specific causes or programs or projects that are important to the donor. And they really don't have a sense of what difference their charitable dollars are making. High impact charitable giving, though, inverts the pyramid. So we work with our donor clients that are interested to help them move in this direction. This is when most of their charitable giving time and money is focused on supporting key charities that fit their funding interests. They change their behavior then to making fewer gifts, bigger gifts, and multi-year commitments using using gift agreements and other methods. And we find that they will then have a much deeper understanding of the programs they're supporting. They should and do look for measurable results, and their charitable dollars are much more likely to have an impact, a positive impact on the success of the programs. It works very well for both the receiving charities and for the funders themselves. But I mean, the big question is, how do you do this? So some global philanthropists we were recently introduced to suggested using this kind of framework to thinking through a strategy for your charitable giving. If you start with the question to yourself of what problem am I trying to solve? Is there a social issue that really means the most to me on a personal level? Now, sometimes you evolve as you get to know the charitable sector better, and with a foundation or a fund, we've seen it takes time. And once you're there, you then focus on, which organizations are actually working well in that space. Do you want to join them? Are there things that are working well that you can increase their impact, or there are things that are missing that you'd like to focus on? And after you start to find your partners, you can then proceed on how else can I help and how do I measure impact. To give you a quick example, one lovely lady came to us with her husband. He just sold his business, and they had a $500,000 foundation account set up. She would phone us every week and say, Denise, would you give $250 to this charity? And next week she'd phone and say, we had another request, would you give $250 to that charity? Because prior to having a foundation account, that was a reasonably good gift. And it is a good gift, they certainly all matter. But with a $500,000 foundation account, the minimum disbursement that she was required to make was $17,500 a year. At $250 per disbursement, that's 70 charities she would have to find to fund. So we worked hard with her to help her think about what was important to them. And she'd been a retired school teacher, so ultimately her big passion became literacy. And once she was able to focus there, she worked through the rest of these questions and was able to work closely with some key charities. She even sat on the board with one of them. So her gifts moved from being $250 to being $3,000 to $5,000, much fewer, much more impactful.
That's a great example. So family plays an important role for a lot of philanthropists. It can be a great opportunity to instill values in younger family members, and it's also helping to promote the continuity of giving over many generations. And Terry, I know this is something that's near and dear to your heart. Can you touch on how you've engaged your family members and the causes that you and Bonnie have chosen to support?
Absolutely, and there on the screen you can see all 16 of us looking pretty happy. One of the things that we decided to do recently was include our children and ultimately our grandchildren in the giving process. And we decided to start a fund for every one of our grandchildren and children. They'll become donor advised funds soon. They're not large enough yet, but again, the idea was to get them started while we're still around, because in our will, we have designated a sizable amount of what we're gonna have left after we're gone to charities. And we thought it would be great if each one of our children and each one of our grandchildren had a specific fund that they can, in the future, be a bit of a legacy for us, but also help them get involved with what goes on in their community and make sure that they're thinking about others and on an annual basis have an opportunity to help whatever charities they think are important at the time. You know, it was interesting when we got involved 20 years ago with community foundations. We looked at it, and it was a tax issue to begin with, and the timing was right to do it. But we found that a lot of people that come to community foundations, they come for the tax, but they stay for the service, the advice, and all of the information that they receive going on an ongoing basis to help them fulfill what their needs are and what kind of charities that they want to promote. The other thing that we found is that we've decided to take a sizable amount of what we have right now and get that working in the community from a charitable standpoint. And a wise man once told me that it's better to give with a warm hand than a cold hand. And the idea of having the warm hand to watch exactly how your money is being used and to have some direction as to how it can be used properly by the charities that you choose.
You've got a very happy bunch on your hands there. Nice family picture.
I just told them that I started a fund for everyone. That's why they're smiling.
Denise, do you have anything to add to Terry's comments?
Well, involving family is one of the great satisfactions that donors have in opening a structure to do their giving through. Actually, our very first donor opened his foundation account because of his family. He said that his children were just graduating university and he felt like he was losing touch with them. They were going to be inheriting more money than they realized. He wanted them to have a sense of values. And so they sit down every year at Thanksgiving, which is very timely. And he will say to his wife and his two children, well, this year we're giving $10,000 out. We each have $2,500. Let's talk about what charities you want to support. And that's their discussion at Thanksgiving. And they've been able to engage their adult children when normally they don't see them very much. And it's been very meaningful to them.
Right. Thank you. So if you've spent time thinking about your framework, you may or may not have involved your family. How do you know your money is being put to good use? This is often hard to measure and it can be a challenging task. And I know it's actually one of the leading reasons why people don't donate as much as they're able to. So Denise, a lot of our participants on the call today are business owners and they're used to measuring results. How should people think about measuring the results of their giving?
That's a great question. And I have to tell you that one of the best tools in the not-for-profit sector that have been used by private foundations for years are grant applications. And these are simply more formalized written requests from charities that are given to foundation funders so that they'll have a lot of information both on what the program is and how to measure results so that they can make informed decisions on whether to support this charity or not and to know if their money's making a difference. So I'm just going to take a moment and walk you through a grant application that we've developed for our donor clients to use. And I can tell you that they get great satisfaction out of working with charities once they've sort of interviewed them through the grant application process. So you can see at the beginning of the application form, the charity gets to introduce themselves and provide much more detail on their purpose, their chair and their focus and how big they are and sort of the impact. They get to pat themselves on the back and give more detail just to their background. And then we move forward to explore the ask in a lot more detail. So in this case, this charity was asking for $25,000. It doesn't mean the foundation fund gave them 25, but that's what they were asking for in this particular grant application. And we said, please describe the project or program that you want funded with this money. What location is it benefiting? Who are the beneficiaries? What's the timeline for completing the program? And what are your expected outcomes? So they have room to do that. We also asked them, how much of the money I'm giving you or the donors giving you is going to be used in administrative and fundraising costs. This can vary on different types of programs, but we think it's important for our donors to have an idea of that. And certainly interesting in many cases is what portion of the program costs is this gift going to fund? In this case, it was 20%. I mean, sometimes it's 100, sometimes it's smaller, bigger, but that gives you an idea of how successful and how important your money is going to be. And we also, in pursuing details on the funding request, want the charity to describe their rationale, sort of the need for, I mean, we have to make sure that the programs need it. So what's the rationale in sort of implementing this program? What will be the short and long-term impacts and of this initiative? And also, why are you the right organization for us to send our funding to? So they get a chance to sort of answer all of those questions. And ultimately, last but certainly not least, we ask them for the measures of success. What are their key metrics in assessing this program's results, and what are the risks or barriers to success? And so when you get the charity to say, these are our measures, these are our metrics, and they might be quantitative, you know, increased participation, maybe less participation. They might be qualitative, like reduced mental health stress. They might be a combination of both. But when you have some specifics to measure the success that the charity says these are our metrics, it really gives you a sense of how well your funding is working and how well that program's working. One of our donors who's very passionate about his cause is funding some very grassroots initiatives with very big dollars. And he asked us to develop an impact report for him. So while he's willing to enter into 5-year commitments with them at large amounts, after every year, he holds them accountable to their own metrics and says, so this is what you said you were going to achieve. How did we do? And the report takes them through different stages. And, you know, sometimes things have worked. Sometimes barriers have come up. Sometimes there's been surprises. But effectively, that donor who's funding them is really partnering with them. And, you know, they may change how they're spending the money. They may agree on that. Or he may say, no, it's not working. I'm not moving forward. So those are some of the tools that are used in the not-for-profit sector. Our donor clients have been delighted to work through a grant application process because it gives them this kind of input and helps them create partnerships that are successful.
A lot of detail there and some good objective measurements. I like that. Terry, last word always goes to the client. What advice do you have for others that are looking to get started?
Well, I think the advice is to get started, basically, get going, but you can start small. That's the good news with donor advised funds and other foundations. You could start small, get your toe in the water. There are different kinds of donor advised funds. There are other kinds of funds also besides donor advised out there. So, you know, my counsel would be to check out whether it's Canada Gives or your local community foundation, or there's other people out there that do administer funds for you, and give it a try. See what it's like. See whether or not it's the type of giving that you want to get involved in, and then you can add to it. And you can also, you know, depending on what kind of restrictions you put on your fund to begin with, you can move it all out to another spot, to one specific charity, if you want to sort of give up the donor advised part and just be involved with one charity. But really, you know, get going now and see how it goes. Again, it's a terrific process, and one of the most joyous days in our household is the end of February, when we get the report as to how much money we have to give away each year, and then you have a chance to sit down and you have your favorite charities, but then you have to respond to everybody else that you're going after because they have their favorites, and it's great to be able to use the money from your donor advised fund to help support other people's charities too.
Great. Thank you, Terry. Appreciate that. So I'm going to shift us now towards questions, and I see there's some questions coming in here. So I'm going to read the questions and I'll direct them to our panel members. And I think the first question is going to go to Denise. And the question is, what size of gift do you have to make to be able to ask a charity for the reporting and on the results that you had outlined?
That's a very good question. And we work closely with an organization called Imagine Canada to develop this grant application process. And they said that charities are willing to fill these grant application forms and written proposals out for gifts of $5,000 or bigger. Certainly not, preferably not less than that. They look particularly at foundation or fund donors as being able to make multi-year commitments. So they're happy to invest the time. And they like to do them.
Fantastic. Terry, there's a question here, just looking to understand how you involved your grandchildren with your donor advised fund.
Well, we basically started a fund for each one of them at the Oakville Community Foundation, and then in our wills have designated a certain amount for each one of them once we pass on. We haven't gotten to the point yet because we're just in the process of doing, we started the funds last year or a year and a half ago. So we haven't yet got to the point where we've sat down with them and said, okay, where do you think this money should go? I mean, that's going to be the next process once we have a little bit of funds in each fund so that they will have $500, $600 or $1,000 to be able to designate to which charity they think is important. So yeah, it's an ongoing basis that we're sort of developing.
Right, and it's nice to be able to get them started early.
Absolutely.
I have
And again,
another
it
question.
doesn't cost anything to set a fund up. You need a minimum amount in the Oakville Community Foundation of $2,500 to get started, and so that's what we did, and we're going to build on that.
Okay. I have another question I'm going to send to Denise, and it's a question about how do you reach a smaller organization with your giving, local food drives as an example. And Denise, perhaps you could also let Terry answer this as well when you're finished with his involvement with the community foundations.
There are lots of resources in the not-for-profit sector for finding charities. So, you know, if you have a name of one, and we can certainly look it up. There's databases, there's lots of sources and resources available. We help, our donors often will have a cause, and then we work from there and find charities and provide all sorts of detailed information so that they can make a decision. We'd like to give them also, you know, sort of a history of how long they've been established. Lots of people prefer to know if they're financially stable. Some people prefer grassroots organizations. So there's lots of resources available for us to do that research.
Yeah, I can just add
Terry,
to that too, that there's 191 community foundations across Canada. So that's a network that rely on each other quite often for advice or information. When you look at specific communities like the Oakville Community Foundation, they're pretty much in touch with almost all of the organizations within Oakville, and you know, put out grant applications just like Denise was talking about. So you know, they can get right on the ground, if you will, and understand which some of the smaller ones. And that's the other thing that we got to realize, that there are a large number of quite small organizations that are very needy, that are very worthy. And a $500 or $1,000 donation to them will be almost life-changing for them.
Vince, we have a tax question for you. Just looking for you to elaborate on some of the efficiencies of giving through a corporation.
Yes, I'll try to make this as concise as I can. So if we go back to the example that I described where a family had a portfolio. So let's say that portfolio is now sitting inside a corporation. If you were to donate that portfolio directly by the corporation, here's what's going to happen. Number one, the corporation will get a tax deduction worth about 50% of the donation. Secondly, they will not pay tax on that $800,000 capital gain. And the last thing, and this is what makes it more efficient for corporations, is that non-taxable portion, that entire $800,000 gets added to your capital dividend account. And that account represents a balance that can be paid out to individual shareholders in the future tax-free. So not only is there a no tax on the capital gain, that $800,000 gets added to your CDA, which can be a tremendous advantage to the shareholders, especially those that are in the top tax brackets.
Thanks, Vince. And I'll add that we could certainly work with whoever's asking the question offline if you'd like a more detailed example of that. Denise, I have a topical question for you, and it's in relation to the We Charity.
Yes.
Has that changed the way people are structuring donations, or anything you've been seeing across your clients?
None of our clients, and we have about 160 different foundations all across Canada. Not one of them has supported We in the past, so it actually never came up. I have to tell you, I had a question from the media, but we don't have any interest. We have no interest from our donors, and it's just not something they're doing.
Okay, thank you. Well, I think with that, I'm going to close it off. I know we'd love to spend more time on each of these topics, and there's still a few more questions, and we'll be happy to follow up with you offline. I want to thank our panelists, Denise, Terry, Vince. Thank you for generously sharing your time and expertise. I know we've only started to scratch the surface here today. And for everybody out there, I hope we've planted some seeds, given you all one or two new ideas to think about. This can certainly be a powerful tool when it comes to managing your wealth. And also with Thanksgiving around the corner, it's a great time to start thinking about your charitable giving. If you want to learn more, our team's ready and able to help. We have a lot of expertise internally and through our partnerships. Just get in touch with your Newport portfolio manager and start the conversation today. On behalf of everyone at Newport, thank you for attending and stay safe.
Thank you, everyone.
You.
Bye.
Take care.